You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody. That rockin' bit of tunage means it is time to rock out with the Option Block. Getting your week started here proper, as the British like to say, kicking you off with some options goodness, some unusual activity, education, what's trading in the marketplace, looking ahead, some strategy, all sorts of good stuff. Mix it all together. You got the Option Block. My name is Mark Longo from theoptionsinsider.com. Check it out if you haven't been there in a little while. A lot of cool new stuff popping up over there, and of course the ever exciting The Options Insider Radio Network. Hope you enjoy the broad spectrum of the network we're bringing to you. If you do, hey, head on over to your platform of choice: Google Podcasts, Spotify, Pocket Casts, iTunes. A lot of you like to use, and leave a review. Let other people, helps newcomers find the stuff. We like the new flux of people coming in. We certainly have seen a lot of them with crypto and other shows coming on the network of late, but more the merrier out there. So head on out there and leave a review if you like what you hear. If you don't like the Rock Lobster, you can leave that part out. It's okay. I won't hold it against you. And, of course, however you listen live after the fact, hit us up. Questions, comments, insights. Don't put the questions. Some of you do that. Put questions in, like, the review platforms like the iTunes and others. Don't put those there because we don't check them that often. So it'll take a while. If you have a timely question, hit us up on the more immediate platforms like social media, the website, that sort of thing, or in the live chat. But not in the platforms. All right, here we go. Let's see who's joining me on the old all-star panel today. Let's see. Let's go out to the far east, where we are joined once again. Has been a little while since he's been on the show with us. The old last emperor himself, Mr. KONSTANTIN VRANDOPULO, holding down the Fidelity active trader hot seat today. Mr. Last Emperor, welcome back to the program, sir.
Thank you so much, gentlemen. Always a pleasure. I'm excited to be here. It feels like, I missed out on some fun last week. I know that the market has been taking folks on a roller coaster ride here. At least it felt that way through last week. And obviously today we're having kind of a, a trending move to the upside with hardly any downtick. So, a pretty significant reversal what we saw on Friday. So we'll see how the day ends, but it certainly has been interesting as of late.
I have to imagine the phones were probably not too quiet over the past week in Fidelity Land. Is that the case, sir?
They certainly weren't. People are not really sure how to take this volatility, even though I know that, we talk about the VIX, we talk about the moves in the S&P. I think that the moves in the S&P and maybe even in the VIX index have been relatively subdued compared to some individual names out there. And I know that a lot of active trader investors, at least the ones that I speak with here at Fidelity, tend to dip their toes in the water with individual names. And there has been no lack of volatility in some of the names. And some of those I'm actually going to be talking about today when we're discussing what's trading here.
A little tease. Look at you getting into the old radio game. And also joining us, also from the far, far east, the least of the U.S., the Rock Lobster himself. He is the nightmare of all crickets on the East Coast, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. I almost said Mr. Meatball. Mr. Rock Lobster, how goes your ongoing war with the cricket folk, sir?
You call me Mr. Meatball at least once a show now. I believe you're officially becoming addled in the mind.
Yes. All this talking has addled the brain, sir.
Yes, and I did actually shoo a lot of crickets out of my office. I don't know how they got in, but they went screaming.
You know what you need? You need a nice gecko or maybe a monitor lizard. They devour those crickets. Just get one of those, unleash them pre-showtime.
Do they? I had a couple of king snakes running around.
Yeah, if they're loose in your office, you got to do what you got to do. You get the gecko, he'll unleash, he'll get some eating. If he gets too big, then you get something to take out the gecko. It's an ongoing arms race. But either way, it'll be interesting. And also joining us, last but not least, hopefully he doesn't have any natural evolutionary arms races going on in his office. Maybe he does. He is Uncle Mike TOSAW from St. Charles Wealth Advisors. Uncle Mike, how go things? How goes your own personal mutual of Omaha, sir?
Well, I have no evolutionary arms races going on in the office. So we're doing well here. All is well, as it always is. And market's up. Not quite enough to say my thing, but markets are up. So the bulls are happy.
All right. And let's see if the people are happy as they roll right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, let's do it. Let's talk about what the heck is trading out there. A bit of an interesting one, as the last emperor alluded to last week. Bit of a topsy-turvy one, coming on the heels of the week before. We saw those dramatic attacks in Saudi Arabia. We saw sell-off in the market, and the market kind of shrugging it off towards the latter portion of the last week. Last week, we saw others news making the market topsy-turvy, including some surprise stuff towards the end of the week where we were talking about maybe trying to delist Chinese-related names in the U.S. and remove them from various index funds and all sorts of madness. A lot of people didn't realize or understand even really how that could be done or if it could be done and all sorts of issues. So the market selling off, I think, in a lot of uncertainty, as it is wont to do, coming into this week. Looks like all is right with the world again. Most of the major indices up pretty firm. S&P up nearly 0.75%. The Dow, the laggard, only up about a little more than 0.5%. NASDAQ taking the charge to the upside again. Usually it's leading the dance a lot these days, to the upside and to the downside. So you're getting your vol action out there in NASDAQ land of late, up about 0.85% right now. Gold and oil both taking a bit of a break today on a little bit of the sheen out there. It's surprising because, we heard the Saudis over the weekend warning about if something isn't done with Iran, these record levels of oil prices out there. So that apparently not spooking the crude market out there, selling off down to 55 again in WTI out there. Of course, some individual names, as the last emperor alluded to, are on the rampage today. We've got Apple soaring up to 5.6 handles, about 2.5%, threatening that 225 level, getting back to levels it pretty much hasn't seen in nearly a year since last October. So, how far distant now it's those 150 puts that everyone was hemming and hawing about selling not too long ago. How distant those seem. In the rear view mirror, we also got Tesla back in the news moving a wee bit today. Let's see where they are right now. Good old Tesla. Of course, they're not in my list in front of me, because why would I have Tesla open in front of me? What fun would that be, listeners? But Tesla, of course, making news a lot over the as it does any day that ends in Y, pretty much. Off about $1.60, about 0.5%. So actually, percentage-wise, kind of a quiet day for Tesla. Still around that 240 level. Of course, a lot of news about the Solar City acquisition. Did or did not Musk actually recuse himself? Like he said, some new lawsuits on that. Now, these days, this leaked quote-unquote letter about what's going on over there. Are we going to hit 100,000 cars in a quarter? That seems like a pretty lofty goal. It seems like they're pretty close to it, but maybe going to fall short of it by a few thousand cars. So a lot of that going on. Also, we got Peloton out there lighting up the tape to the downside, following the heels of a lot of these other quote-unquote unicorns, these billion-dollar startups that make no money and then proceed to get annihilated on the street. Peloton following that same MO, at least for now, IPOing around 29 with a market cap north of $8 billion. Has now sold off down to around 25 and change. That puts it shedding about $1 billion in that market cap so far. So again, maybe not exactly opportune times to go public. And all of this meaning our old friend VIX, though, coming in a little bit, given today's rally, off about not quite a full point, but pretty close to it, 1635. That puts us off, about a little over half a point, about 2/3 of a point, really, from last show. VVIX still hovering on that 99, so close to 100. And VXX, our old friend, about 23.7 off, about 1/3 of a point. All right, let's get into some of the other things that are lighting up the tape. Let's go back around the way we came. Let's start with Uncle Mike. So, Uncle Mike, sir, what is lighting up your tape today? In addition to maybe taking another look at your old friend Apple out there, sir?
Well, a couple of things. The silver, of course, is down quite a bit right now going into today. Roughly around 3% in SLV camp. So that's definitely something that I'm taking a look at. Still, it's one of those things to where it's above where it was a while ago, but not quite to where it was a couple weeks ago. So definitely some things to look at on there. It still has not really moved enough to justify any adjustments within my collars, but still, it's definitely been moving, that's for sure. Yes, we do have a little bit of an uptick on Apple today. We're at the 224 level, still below the all-time highs, but still interesting to watch, to say the least. The main thing, though, I think that we need at least that I'm watching right now, is the news from the impeachment. It looks like right now that, I talked about this a little bit on Thursday, that even if they get through the House with impeachment, which if Pelosi wants to do it, I think they likely would, with the Democratic support on there with their majority. But even if they get through there, McConnell has said that the Republican senator from Kentucky said he'd have no choice but to take it up because that's the procedure of the Senate. But even with all that happening, it's not going to get through the Senate because the Republicans rule the Senate. So I think this is ultimately going to be a lot of nonsense. And it feels like, once again, I'm not trying to be political on here, but if I can see this, the Democratic strategists are going to see this too. This is going to be a wasted effort. So I think what their strategy is that the Democrats want to go into the 2020 election saying Trump was actually impeached, so don't vote for him. Even though he couldn't be removed from office, don't vote for him. And so I think that's ultimately what the strategy is, what's happening here by the Democratic Party. And that's kind of where we are with it right now. And the market appears to kind of think that as well, because it seems to have, once this has been digested, the market's kind of sifting upward again. So we'll see where this leads. But that's one of the main things that I am watching. If anything, for entertainment purposes, earnings aren't coming out yet. And so there's not a lot to look at this stage, but we do have that.
Interesting stuff. You're right. All sorts of crazy theories are flying around out there. And I'm starting to see the tinfoil hat crowd out there saying that this is all an elaborate ruse by the, shall we say, the progressive wing of the Democratic Party, trying to get one of their more progressive candidates in the field, and maybe with a 1-2 punch of this impeachment move, take out Biden, who's a more moderate candidate, because he's getting a lot of blowback on this, and also maybe try to derail Trump in the process, so pave the way for maybe a Warren or a Sanders, one of those types of candidates out there. So that's all sorts of conspiracy theories floating around in the ether. Mr. Rock Lobster, I know you're not afraid of a conspiracy theory or two. You're up there in northern New England. That's kind of conspiracy theory central. What's on your radar these days, sir?
Well, I think part of trading is you have to take your tinfoil hat off sometimes. And
what fun is that, sir?
I know. So the impeachment. Well, there's a couple of things that I find interesting. Is the market vacillated for 2 years on this Mueller probe, and now all of a sudden the House is basically saying, "Well, we're not going to look at that at all." They chucked it to the curb. So if you're looking at from an uncertainty point of view, that's one less thing. I'm going to assume that they don't re-pick it up again after the Ukraine thing, but they could, of course, because they're just leaving it on the shelf. I guess they're going to dust it off when they need to, and then you have the most recent Ukraine thing, and I could see that it goes to a vote, and I could see that it happens. I don't think it really matters. It does feel like historically there's been 2 other impeachments, and they were mostly political, I would say. There was some stuff there. It was all kind of rinky-dink stuff, to be honest. And this will probably go the same way. So just the way the market is receiving things today after a weekend of news and, and Twitter sphere and all that, at least for today, it looks like volatility is just saying the status quo is going to remain. Now, I don't know who the Democratic nominee will be, but it appears that most likely, at least just from vol today, Trump will be. The vol traders are pretty good at it. If people were scared hugely, I think the vol would be bid again. Tomorrow could be another day, but I don't think anything came out over the weekend that made things worse. Let's just put it that way. So a lot of these things will keep VIX, I think, elevated. Because remember, VIX looks 30 days ahead. It doesn't look at today's trade, although it's influenced by that. So I could see, VIX staying up a little bit, even though the market's not moving a lot. And I think there was we had things like, we looked at the 9-day VIX last week. The 9-day VIX was dying, and then all of a sudden we had the move. So it's almost like somebody knew that this was going to come out and they were buying puts or something like that. Like now that you can look back and see there's, some people had knowledge of this investigation into early August, it is possible that this could have been somehow, leaked through the grapevine somehow. But, right now we're stuck with no China news, no China deal, and an impeachment process that is looking, at least for now, like the House is pretty set on it from what I can tell, although they haven't voted. When they vote, that will mean they're serious, because you can't impeach without voting, right? You got to vote. And then, then it moves to the Senate. So I think 3,000 is still the top until we have a deal, until some of this stuff comes to fruition. We are going to have some earnings out in a few weeks, but unless some drastic bombshell comes out, I think we just kind of do the same thing for the next couple of weeks, and up and down, up and down, up and down. And I could see VIX getting back into the high 13s or low 14s, as early as this week, if nothing really happens. And certainly possibly next week, again, because we don't really have any much earnings, or there's not a whole lot of momentum. But of course, if the news really changes one way or the other, that could move vol a lot more, and it could move the SPX a lot more. But we have not seen it. Like we got that, every bad China tweet now, you just get higher lows on SPX. Like we didn't see 2,900 this time. We saw 2,950 or something. I got to even look at what the SPX low is, because it was so fast that it traded down there. It's hard to actually remember how low it got. Let's see here if I go to, I'm pulling it up. So anyway, I don't expect a ton to happen unless we have more headline news, and that is the way I seize it and the way that I'm trading it.
Maybe giving out your crystal ball pick a little early there, saying a 13 by this week.
13 handle is certainly possible. Yeah.
Out there in VIX land. Maybe getting out of the VIX dark alley zone. We shall see. We shall see in a little bit. Mr. Last Emperor, sir, what is lighting up your tape, and what are the folks out there in Fidelity land slinging on a day like today?
Yeah, guys, speaking of conspiracy theories, so just a little bit off topic here. I was, as you know, I was vacationing up in New England visiting family here a couple of weeks ago, and made it up as far northeast as Gloucester and enjoyed some cold water lobsters out there. So sitting at a restaurant thinking, it kind of reminded me of the fact that we call Mr. Andrew Giovinazzi the rock lobster, and I wanted to ask you guys, how come that's a little bit contradictory to what it should be, given the fact that Maine is kind of the capital of the cold water lobsters here in the U.S. How did that nickname come about?
It should be the cold water lobster. Is that what you're saying, sir? These are the deep questions that we tackle here.
I think we should actually go with that. We actually had a poll on the show about how the greasy meatball got his nickname. Maybe we should start doing polls for strategy blocks now on how the rock lobster got his nickname.
So Longo just thought since there was a lobster in it, it sounded good enough.
Yeah, it's kind of whatever comes to me in the moment, you know? It kind of whatever resonates with me. And then these things tend to stick over time. And yeah, we had a lobster-ish guy, Maine, so obviously lobster has to be there. And I mean, yours is pretty easy. Konstantin, you know, last emperor of the Eastern Empire. So that kind of makes it pretty easy. Not many other lobster things going on out there outside of the old rock lobster dude. So I think it kind of just resonated and it went from there. I think you'd probably rather be the rock lobster than the cold water lobster, if I had to guess.
Well, that's good enough. But that was a thought, guys. I just wanted you to know, Andrew, that I was thinking about you, and you know, it didn't make perfect sense at the time. Kind of came to me in the moment, you know.
Glad to know we're in your thoughts on vacation, sir.
That's right. But
what's the show too much?
What's trading here at Fidelity by Fidelity customers? Apple is definitely top of the list. You guys know that it's been a name we've been mentioning week after week, and it seems like the Fidelity customers tend to lean for some reason to the sell side of the equation. Today, even though the stock is up 2.5%, as our generous host mentioned earlier, it defies logic, I guess, in a sense. Fidelity customers are definitely leaning to the sell side with around 56% sells to 44 buys. In terms of price action, you know, they're obviously moving on the fact that J.P. Morgan reiterated overweight on them, being one of the largest investment sell side houses out there, and upgraded the price target out 12 months from 243 to 265. So the stock is ripping higher. You know, been trading sideways, I would say, for the past 2 weeks between the levels of 225 and 215. So been stuck in the $10 range. Not that $10 for a $225 name is not a significant a range, but you know, especially for the market cap of this size. But it's been moving around today, obviously, kind of testing that top boundary, as was mentioned before. The last time we've seen these levels, have to think back all the way to 2018. So October, September, where we peaked out there at all-time highs, close to 230 or so. So interesting, of course, for the bulls. You know, the story tends to continue. It's been in a pretty strong uptrend ever since we hit the bottom in December. You can draw trend lines many different ways. But, if you follow the logic of market practitioners and technicians, you can look at moving averages. And, of course, this stock right now in terms of price is above its 20, 50, 100, and 200 AMA. So that tells you something. All of those moving averages are trending higher and have positive slopes. So kind of speaks to the strength in the name. What I find quite interesting is the fact that implied volatility has been rising in this name, looking out 30 days, even though we don't have earnings, right? Almost for another 30 days or so. So 30-day implied vol right now is at 27.6. And just a week ago when I was talking about this name, or maybe a little bit longer than a week ago, the Thursday, the week prior when I was on, implied vol was at 23. So implied volatility is creeping up, 4.5 absolute percentage points, while the stock is actually sideways and now testing that top of the range. So an interesting phenomena. Not a whole lot of volume so far today in terms of stock trading, but there have been some pretty big prints in the options markets, and I'm sure we'll talk about it a little bit later. The second name I wanted to mention is Amazon, and this is the one that I don't think I've talked about in a while. I'm not sure about my colleagues that have come on, but this is a stock that seems to be in a little bit of trouble. I know that we haven't been really mentioning it a lot, I guess, the fact that the stock is trading at, $1,700 a share. Maybe the options markets don't see massive option activity just because of the notional value of the size. Not that, these contracts don't trade. They definitely do, and they're very liquid. But they don't trade in massive sizes in terms of the amounts of contracts. But the stock, has been in trouble ever since it reported earnings last time. It was around the $2,000 mark going into the earnings announcement. Right now, trading at 1732. So it's down almost 300 points in the matter of about 3 months. Traded sideways between a range of 1820 and 1750, and right now is basically on its lows. Now, what I find interesting is that, conversely to Apple, I would say, this stock is definitely in a downtrend in the short to intermediate term. It's trading below all of the moving averages that I mentioned, 20, 50, 100, and most importantly, last week it actually broke the 200-day moving average. That tends to be viewed as this, institutional level of support, right, for an uptrending stock generally. So it broke that level. That's right now at 1777, so we're about $40 below it. And implied volatility is definitely rising on that fact. So it's breaking some serious levels of support. Implied volatility currently at 29.4. Just a week ago or so, when we were about $40 higher, implied vol was sub 20. So it definitely spiked, and maybe that kind of references the sentiment of how traders are viewing it right now and what potentially could come. All right, the next one is BABA, and as our host mentioned earlier, we got kind of hit on Friday in the broader markets, but most importantly, the Chinese stocks that are listed here in the U.S. got hit the most. BABA was down at some point. I'm pretty sure it was close to 7%. I think it finished down 6% from the open on Friday. Today, up 1.3%. Again, on the back of the news that maybe the administration is looking to possibly delist Chinese companies from U.S. exchanges here. And, the stock was down massively on just explosive volume. There was a lot of participation. I tend to follow volume, not necessarily, as a predictive indicator of any sort, but when I see unusual behavior and massive move in one direction or another, it kind of speaks for itself. The stock traded on Friday 33 million shares, and on average it trades around 12 million. So it was, an incredible amount of volume. The fact that today, I guess some of those maybe original news wires from reported by Bloomberg got debunked by the Treasury as well as by Peter Navarro. I was listening to a little bit of a soundbite. He was saying that the reports originally were not correct, or at least parts of them were not correct. So on the back of that, the market recovered everything, but these Chinese stocks, Alibaba is up 1.3%, but it hasn't nearly recovered what it lost on Friday. And this is not a small company. I mean, this is a $430 billion company, so it was definitely a significant move. The last one I'm going to mention today is Micron that Fidelity customers are trading. Micron got destroyed on earnings. That was a sad move because it's been carving out this uptrend since about, I would say, the middle of June. And it's been, rising by significant percentages to the upside nicely with a few drawdowns. But overall, it seemed like it was, maybe out of the woods, was trading above the 2050, 100, 200. So it was kind of repairing some of the damage that we've seen in the stock over the past couple of years, and reported earnings and collapsed, right? So I was looking at the straddle price last week. It was around 7% expected move. Over the past 20 quarters, I think the average one-day move post-earnings was around 6.3%, so the markets were already pricing a little bit more in volatility terms into that earnings expectation, but the stock was down 10%. So I think everyone got caught by surprise of what they reported. Many ways you could look at it. I guess you could dissect the numbers and listen into the conference call and understand that they mentioned that the Chinese slowed down and the trade tensions are actually affecting their markets pretty significantly. But needless to say, right, the stock market reacts and the stock got slapped. So it's trading right now pretty flat, or about as close to flat as you could be, 43.27 here, up around 14 basis points on the day. So in terms of the way the Fidelity customers are leaning in the past three names that I mentioned, Amazon, BABA, and MU, they're actually pretty much spot on 50-50. So, not necessarily directionally biased in any one way or another, except for Apple. Seems like they're leaning a little bit more to the sell side. So that covers it for us here, guys.
There you go. Not a heck of a lot else really lighting up the tape out there today. VIX struggling to put up 100,000 contracts today, not even at that level coming into showtime here. SPY, a little bit north of 1 million, about 1.2. It's not quite half its ADV out there. SPX struggling to hit 500,000 out there as well. ADV well north of 1 million. The Q's 231,000. The ADV's north of 600,000. And the Russell, aka IWM, doing about 89,000 contracts when the ADV is about 500,000. So not a ton out there dominating the tape. In fact, the bottom half of the top 10 looks like it's the day before Christmas or something along those lines. Not a lot of volume at all. I mean, Netflix, 77,000. When was the last time you heard something like that? Telephone, number 9, aka AT&T, 79,000. Number 8, Facebook, 83,000. Number 7, Microsoft, 89,000. Number 6, Micron, 97,000. You go all the way up to number 5, Tesla, to break the 100K level with exactly 100K for Tesla. Number 4, Baba, $1.12. Tie with number 3, AMD, also at $1.12. I'm sorry, $1.46. 112 of that, 1,000 of that in the calls though. So very heavily biased call flow in AMD. Number 2, NEO, our old friend NEO. Maybe some of this Tesla noise rubbing off on NEO out there. 149,000. Number 1, good old Apple, like you mentioned, doing respectable paper in a day when no one else is. 317,000. I said it before, I'll say it again. Where would the options industry be without Apple? It's kind of been carrying our volume on its back for the better part of the past decade or so. Let's keep on rolling and see what else is moving on the volume side. It's time to light up the old odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Like we mentioned, not a heck of a lot lighting it up out there today. So we're going to start things off looking back, actually. You'll recall Mr. Rock Lobster, almost 2 months ago, early August 1st to be precise. Remember our old friend, the Flow Master? He got really giddy. He got really excited. He doesn't get giddy too often. And he chimed in with us, wanting us to talk about some call love out there in PAAS, a.k.a. Pan American Silver, ticker symbol PAAS. At the time, it seemed like it was a call palooza going on out there, and indeed it was. There was a ton of paper by the time Henry wrote into us, it was about getting close to 20,000 already that were lighting up the tape. As the day went on, we saw a lot more piling into the tune of nearly 50,000 contracts going up that day, 49,363 to be precise. So a lot of action out there. On that day, August 1st, we saw PAAS closing at 1664. Coming into today's showtime, 1556, off about 60 cents. So interesting how all this played out. We're going to get to that now because obviously that was a ton of paper. Let's start off with what we saw that day because nearly 50,000 contracts going up. I think that's going to bump up the OI quite a bit. And it did, but perhaps not quite as much as you would think. The OI only changed about 19,000, almost 20,000 contracts. It jumped up to about 20,000. So that shows me that there was probably a lot of back and forth going on those strikes, particularly later on. Henry, I think, had chimed in as well that some of it was all small paper tests. Another thing I was weird about, it wasn't like 20,000 at a clip. It was 300, 500, 600, 200 all throughout the day, which was interesting in and of itself. So a lot of small lots. They started off around 25, 30 cents. They got up to 60-odd cents later on that day, which also made me think that maybe someone turning around and taking some profits off the table. Maybe, hey, your money doubles in a day? Not a bad time to get the heck out of Dodge. So it seemed like they closed a good chunk of it that first day, hence the nearly 50,000 contracts we saw going up. They were opening, but then they closed out right away. So only about 20,000 new contracts being established that day. So that was the first kind of weird thing. We didn't know that, obviously, that day. It takes a day or so for the OI to process. So that was interesting in and of itself. And then keeping an eye on these throughout the rest of the term. Obviously, expiration was on the 20th of September. And these are SEP calls. I think if I didn't mention already, these were SEP 18s listeners that were going up. So throughout that period, the stock actually had a good run. This guy was pretty well timed. It got up to nearly 1886 on September 4th. And looking at the analysis of what went up out here, looks like a good chunk of it also got closed a little bit later. So of the remaining 20,000 or so that were open, about 5,000, nearly 6,000 were closed. About 6,000 were closed on the 27th when the stock was 1885, and these options were trading north of $1, around $1.40. So he took the money off the table. Whoever put these on took some money over the table. Weirdly enough, the stock went out still north of that 18 handle. In fact, let's see, on the 20th, it was lower. It was 1680. So that could probably explain why a good chunk were still open on expiration. About 8,000 of these SEP 18s were still open on expiration. So it was a brief flirtation to that almost 19 handle in early September. Kind of sold off again after that by the 13th of September, it was trading 16 and a quarter again. So it was a very brief flirtation to the upside. So this guy, he acted quick, it seems like. Took off a bunch that first day, so Bally 2 to him. He was doing pretty good. And it seemed like he took off a good chunk of the remainder when the stock was pretty much near its high. So maybe you could fault him for leaving some on the table. But overall, Mr. Rockhoff, I have to probably wager this guy is pretty happy with this trade. What do you think?
Yeah, you think he got out of some of those when he had the shot?
Seems like it. How else could he do nearly 50,000 and only budge the OI by 20,000, right?
Yeah, I think, and then I just think he sold them to some unhappy people who are unhappy now. The whole rally in silver and everything is just gone, you know? So, and didn't PAAS used to be those little Easter egg things where you used to color the Easter eggs? Wasn't that a PAAS? Yes,
that is PAAS. Yes, that they also make those. Different company, obviously. Same name though. I think it's even spelled the same. I think it's PAAS.
Yeah. You know, like the guys getting long Easter egg baskets or something. I think this was that, the gold silver trade. We Mike talked about it last week, and everything was just really ready to bust out, and it just busted out on the downside. So it really pulled back quite a bit. I'm not sure if this was a result of that repo market stuff. Everybody was just looking for the physical or real. But I think the guy got out, and not many people are smart enough to buy him at 30 and sell him at 60 right away. I think that is what we'll just call that guy has a lot more game than the average option odd blocker. That's for sure.
Yeah, a lot of people don't have that wherewithal. It's kind of like going to Vegas, right? And you win a bunch of money in your first hand at the blackjack table. And then just saying, okay, I'm out and being done for the rest of your trip, right? And who does that? Same thing here with this trade. People are like, oh, I got some on, I want to let the ball ride a little bit. Obviously, it's working my way. Nope, this guy took off a bunch of them. Still had some on the table, obviously, but still, obviously, took off quite a few. So ballyhoo to this fellow. Even if it was him who left the 8K open at the end, I think he still did all right on the trade. All right, move on. Not a lot else really. Light up the tape, Mr. Rock Lobster, today, so maybe we'll do a combo of these two final ones. First off, we've got, what do we got here? We've got our old friend Cloudflare again, ticker symbol NET, N-E-T. I wonder how they got that ticker. That's interesting. That must have been a contentious one to get. Trading today, 18.13 or so, down about 11 cents. A year ago, they were trading pretty much almost exactly where they are right now, $18. And then in the interim, they pretty much, what is this chart here? This chart is all over the place. 52-week high got up to 22 and change. And then as low, actually, they got a little lower than where they are right now, 17.5. So they're threatening the downside of that 52-week range again. And it looks like someone deciding to draw a line in the sand well below where that range is right now, to the tune of the May 2020 12-half puts going up nearly 5,000 times for $1 even. That's right on the bid. They were $1 at $1.30. This is opening over there on the NASDAQ options market. So it seems like our old friend, the line in the sand, put Mr. Rock Lobster. And then we also have, what do we have? HAIN Celestial Group, rounding out our top three here. This is an American food company. So there you go. They make herbal teas. Ticker symbol HAIN, H-A-I-N, easy for me to say. Trading 21.5. Looks like today about 3,787 of the OCT23 calls going up a little bit off the bid for 17 cents. So a little bit of upside premium harvesting, Mr. Rock Lobster and HAIN, and maybe a little bit of downside line in the sand put writing in Cloudflare. Would you concur, sir?
You know what? I don't like agreeing with you just that easily, but I don't see how we have much of a choice. You get like a 5% yield for the NET puts, which, I mean, if you think the market's going nowhere for the next 6 months, which it's gone nowhere for the last year, if you think about it, we're probably in about the same spot we were a year ago. As far as HAIN goes, just looking at it, you want to take the 17 cents? I guess it's just trying to, generate a little yield at 17 cents. I can't sell anything less than a quarter. It kind of gives me the willies. So, but other than that, that's what they look like. I gotta defer to you on this one. You hit it on the head really quick.
That's your Rock Lobster rule of thumb. Nothing less than a quarter, huh?
I cannot sell anything less than a quarter. To be honest, I have a lot of stuff, and I probably waste a little money. But 3 or 4 times a year, that 16 cents you could have dumped becomes like $7. You're like, okay, well, I'll just keep doing it for another 30 years.
There you go, listeners. You're always asking for rules of thumb. There's rock lobsters, or I should say cold water lobster, whatever we're going with these days. Rule of thumb there for premium selling. Meanwhile, let's keep on rolling. Let's get Uncle Mike here on the program with a little bit of the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, welcome to the Strategy Block. This is the portion of the show where Uncle Mike holds court on some sort of options topic or strategy or educational thingamajig. Uncle Mike, I know you're a big believer in power, sir. You're all about power over there in St. Charles Wealth. And when it comes to power in the option space, doesn't get more powerful than perhaps the power of gamma, particularly maybe when you're short that gamma. So Mr. Uncle Mike, sir, walk us through the power that is gamma.
I got the power. Sorry, couldn't resist that one. So when people are selling out of the money options, that's something that's oftentimes overlooked. So let's say XYZ stock is trading at $25 a share and you sell the 22 put. And you're out of the money and you think to yourself, well, this option cannot possibly hurt me unless the stock goes below 22. And to some extent, that is correct. However, that's expiration day risk. That's not real life. So let's cover expiration day risk to start with on this. Gamma does not exist in expiration day. Now, what on earth does that mean? Well, let's think about this for a second. Once the option loses all of its extrinsic value, meaning the time decay value, gamma plays no factor in it. So let's say that you hold that option until expiration, and let's say that maybe volatility goes higher or the stock goes down a little bit, and you don't look at it. You just close your eyes and go, la, 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 just as a way of avoiding it. If that's the case, then gamma won't hurt you. However, I think it's very important to have an understanding of how gamma can and will hurt you if it's not taken seriously. Here's what I mean. Oftentimes, I've seen newer traders get into trading thinking, okay, I am trading an 80% probability trade or a 90% probability trade because, after all, what are the odds that this call option is going to go in the money, or what are the odds that this put option is going to go in the money, whether it's on a spread, whether it's on a naked option, or even a cash-secured option for that matter. And if the odds are 10 to 1, then you still have the 10% chance that it can go against you. And oftentimes when people do trades like that, they think, well, it's a 90% probability. How can I lose? Well, 1 out of 10 times you will. So have an understanding of that. Now, the way with which gamma can play a role in this is the fact that as the stock goes against you, whether you're naked short or naked long, whether you're naked short a call or naked short a put, whatever way you want to look at it, the value of that option increases in value as it's going against you based on gamma. Closer it gets to being in the money, the more powerful of an option it is. And so if you are trading on margin, or meaning you're not being cash secured, then you're going to likely get a margin call at some point, if depending on how levered you are. Now, I personally, I'm only a cash secured kind of guy, and if I do want leverage, I'll use spreads because I really don't like dealing with margin calls, nor do I like dealing with unlimited risk. But when you're doing this, have an understanding that the gamma can work against you. Now, sometimes if you're levered, sometimes people have rules to where if the stock goes to, let's say you're selling a 22 put and the stock's at 25, if the stock goes down to maybe 23.5, that's the time to get out of it. Some people do it if the stock starts to go in the money, or whatever the case may be. People have rules against this stuff. What I would encourage you to do is, if you are a naked option seller, or if you're a cash secured option seller for that matter, or if you're even a vertical spreader, if that's the case, have some type of rule that can help you against gamma biting you. So my personal rule, I've said it about selling short spreads, is rule number 1, don't ever let them go in the money. Rule number 2, don't forget rule number 1, just because of the fact that it can really start to hurt you. Now, if I were trading more higher probability spreads, something that was maybe further out of the money with maybe a lesser risk reward on it, then my rule would probably be a little bit tighter, meaning I wouldn't let them go from, let's say the spread had a 10 delta on the short leg. Once it went to a 25 delta, long or short, depending on whether it's a call or a put, maybe at that stage I would look to get out, just because of the fact that you don't want to lose too much money when you're wrong. So, with that being said, that is my message for gamma today. Be careful, because it is a very real risk.
Thank you for that, Uncle Mike. And now let's keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Of course, the portion of the show where we tell you what we're keeping an eye on for the rest of this week, at least until we can all gather here together for the old All-Star panel on Thursday. A lot popping off this week. Let's go back around the opposite of the way we just went. Let's start with the Last Emperor himself. Mr. Last Emperor, a lot to keep on your radar this week, a lot to digest. What are you watching for the rest of this week, sir?
Yeah, a few names actually reporting earnings. Something to be paying attention to. I think all of these names have something to do with the U.S. consumer, so I definitely am going to be keeping an eye on those, particularly STZ, ticker symbol STZ. That's Constellation Brands. Pricing in about an $11 move. Stock is trading at 208 right now as of this moment. They're reporting before the open on the 3rd, which is a Thursday this week. So we'll probably be digesting some of that. I will be joining you guys on Thursday as well, so I'll most likely cover what actually happened. The second one I'm looking at is Pepsi. Again, has obviously a lot of exposure to our maybe vice consumer habits here in the U.S. And around the world, for that matter. Stock trading 137.50 right now. The straddle is pricing at about a $3.50 move into this Friday. And then the final one, which has been a stellar performer in the year of 2019, that being Costco. So ticker symbol COST, reporting on the 3rd, so on Thursday, but after market close. Stock trading right now at $288. The straddle is pricing in about a $13 move into Friday. So those are going to be the three individual names that I'm watching. Again, paying attention quite a bit to individual implied volatility, movements in stocks. Most recently have definitely been surprised by how many stocks are moving higher with significantly expanding implied vol looking out 30 days. So that's something that we continue to watch. And again, I mentioned in the last couple of weeks that I've been on that we generally tend to believe that everything goes by the way the S&P goes, meaning vol down, S&P up, and vice versa. Maybe 80 or so % of the time, we talk about the fact of how important it is when you're seeing divergences, meaning implied volatility higher and the market's higher and so forth, and what signs that could be giving you. But a lot of these stocks, right, are moving higher, maybe at or near all-time highs with actually increasing implied volatility going into the month of October. So that's interesting to me.
Costco, of course, they of the infamously delicious $1 hot dogs over there. I don't know if they have a Costco in the land of Maine. Mr. Rock Lobster, A, do they have Costco up there so you can get access to the delicious $1 hot dogs and a soda, I believe, for around that price? And also, B, what else, in addition to their delicious hot dogs, is lighting up your radar, sir?
Actually, I don't think there is a Costco in Maine.
I'm out.
There isn't. I mean,
I was planning on moving it all, the whole operation up there, because it is the options mecca, and now I'm out, sir.
And I would like a Costco just for the $1 hot dogs, but they don't have them. What is lighting up my tape? VIX in the 15 handle could happen here. I made that little prognostication today to my mentees. And, where do we go with just all the randomness? I mean, you have to we got trade war this, Ukraine that, Joe Biden now a bad guy. I mean, the world is just turned darn upside down, and that's the reason why VIX is 16.5 and not 12, because we're 40 handles from the all-time high, and VIX should be 12, and it's 16.5. So both of those things are they are odd in the extreme, the way things are at this point. And like I said, normally VIX is generally high when there's also an expectation of upside as well as downside. So the fact that we could be up 40 or 50 handles pretty easily in SPX on any halfway decent announcement, it seems like, that's leaving VIX where it is. And it's very similar to how it traded like 97, 98 around the last impeachment, proceeding. So there was a lot of, the market really didn't do much, but VIX ended up, or it wasn't VIX then, but SPX volatility was a little higher, and equity volatility was very high just because we were in kind of a crazy bull market. So that's weird. It's kind of like history repeats itself, except then we didn't have a budget deficit, now we have $1 trillion budget deficit. So you can infer from that what you want. But 20 years later, we sure spent an awful lot of money to get basically the same thing.
There you go. And last but not least, Mr. Uncle Mike, sir, what is on your radar until we all can congregate together once again here on Thursday on the option block?
Well, still watching the 3,000 mark. We're making a run at it. I mean, we're 30 points away, so it's definitely something to which to keep an eye on, as well as watching any tweets that come out. And who knows, we might get some type of news from China as well. You never know with that. But aside from that, just kind of waiting for the earnings season to come forward.
Sure, he is not the only one waiting for the earnings season. Unfortunately, we'll have to wait till another show, because that music means we are finito here for this program. But before we all head off into our options pastures to trade and have fun and do what we do until the next time we chat here, let's first go around the horn and see what everybody has that may interest you. Let's go back to the way we came. Mr. Uncle Mike, sir. Folks are intrigued. They want to learn more. Maybe they want someone to babysit their puts for them so they don't have to. Where should they go? What should they do?
stcharleswealth.com. Find my information. Call me. Email me. We'll roll some puts. And we'll probably talk trading. But if you are looking for an advisor who is averse in such things, as Mark has told us before, not many of us out there.
There are not many indeed. stcharleswealth.com is the place to go if you want to find one. And, of course, if you want to talk a little vol, maybe Zone of the Monk, maybe the Danger Zone, maybe the newly christened Dark Alley Zone. They all sound so compelling. I want to learn more. Mr. Rock Lobster, if I want to learn more about these compelling VIX zones, where should I go? What should I do?
Go to our website. I have a free video on how to trade butterflies using volatility. It's pretty darn good. It's gotten a lot of views. Also, my vol newsletter. If you want to see VIX in the zone, learn about the Zone of the Monk in the Dark Alley Zone. Head on over to the vol newsletter, optionpit.com.
These zones are so well named. I think whoever your branding strategist is, you should pay him a lot more, I think.
I agree. I think I should double his current salary.
At least. Maybe triple. Maybe we're talking triple. I mean, people are coming for the names, and then they're staying for the analysis, but they're coming for the sexy nom de volatility. All right, and last but not least, thinking of good names in the marketplace, he, of course, is the Last Emperor himself, Mr. Last Emperor. Folks want to kick the tires and light the fires over there in Fidelity Land. Where should they go? What should they do?
Fidelity.com/options to open an account, apply for options trading. If you are currently a Fidelity customer already, of course, don't hesitate to give me a call. Give your regular Fidelity service line a ring and request to speak with me directly. Be delighted to help you out in any way I can. Anything strategy related here, we're definitely here for you to help out me and my colleagues, Colin, Trey, and some of the others. If you, of course, want to join us for some of the coaching sessions that we do in small groups, that's fidelity.com/coaching. Be delighted to have you.
There you go. Fidelity.com/options is the mecca from whence all of this goodness flows. If you want to reach out to them directly on the active trader strategy, just call them up. Ask for the Last Emperor or the Last Dad of Crypto. All the last guys over there. Or, of course, Brian or all the other guys, Colin, Song of Ice and Fire, all those guys over there. You call them up, ask for those names. I guarantee you they'll know who you're looking for. Or, of course, like I mentioned, if you want to get the more individual stuff, fidelity.com/coaching. Reach out and maybe take a little class with the Last Emperor over there. And on behalf of the Last Emperor and Uncle Mike and the Rock Lobster and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. We'll hit them all on Thursday, don't worry. And we'll see you back here, on Thursday for this show. We'll see you back here a little bit later today, a little bit later than usual for the Crypto Rundown. You know, the guests with that show, listeners, they're scattered all over the globe. Sometimes we have to move things back because a lot of them do come from that Asia and Australia region where it's just hard for them to make our usual showtime. So we try to push it back to be accommodating. So that's why that show kind of ebbs and flows a little bit in terms of time. It's going to be a little bit later today. It's going to be 3 p.m. Central. But if you listen to this after the fact, just hit next on your podcast player if you want to hear all the goodness in the land of crypto derivatives. A lot of vol, a lot of movement out there of late. So stay tuned for that. Otherwise, we'll see you back here on Thursday for more of the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.